stand part. We now move to part 3, and this is debate on clause 46 to 68B, and the question is that part 3 stand part. I call Stuart Nash.
Thank you very much, Mr Chair. This is a part that there was quite a bit of debate on in the Select Committee, and we just don't think it went far enough at all. Mr Chair, the principle about goods and service GST tax is it applies to all consumption that occurs in New Zealand, and the reason for that is it's fair, it's efficient, it's simple, it's easy to understand. There are no complications. But the thing about this, Mr Chair, is when GST was introduced in 1986, I don't think anyone had ever heard of the internet, let alone the purchasing of online goods and services. GST was set at around 10%. It then went up to 12.5%, and now it sits at around 15%. After this government said that they wouldn't increase GST, but they did. But you know, that's the way it is, I suppose. But the concern we have, Mr Chair, is this is about goods and services on intangibles. This is our online services, cross-border suppliers of remote services. So it's targeting a certain area. It was colloquially called the net services tax. So if a company generates in New Zealand receipts in exceeding 60,000 over a 12-month period, then they've got to pay GST. That's consistent with the New Zealand company. But the thing with this, Mr Chair, that we think it should have gone a whole lot further, because what this is in effect doing is it's providing a 15% competitive advantage to all goods purchased offshore and not just electronic goods. I mean, it's good that we're levelling the playing field in terms of electronic goods and services. We agree with that, and that's why we are supporting this part of the bill. But here was an opportunity to go even further. And Mr Chair, coming from a provincial city where, you know, a lot of our retailers are struggling at the moment, and part of that is because there isn't that much money in the economy because things are a bit rough in provincial New Zealand, but also part of that is due to the massive explosion in online shopping. I mean, you can go online these days, you can buy a pair of jeans anywhere in the world, they can be delivered within a week, and you know what, you get an automatic 15% discount on those because there is no GST. And yet those people, those retailers down Main Street, New Zealand, they have still got to pay GST. And so we think that this bill, this section of the bill, should have gone a hell of a lot further than it has. It's a start. It is a start. We recognise that. And there's always been this argument that, oh, well, you know, it costs more to police the compliance than it does the money you would collect in revenue. Now, Mr Chair, I don't agree with that in this case. Sure, we're only doing this in online goods, so it is easier. It doesn't place an impost on customs to handle physical goods in any way, shape or form. But what it is in effect doing is burying our head in the sand and saying, this is too difficult, or we don't really care about middle New Zealand who own the retail shops who are competing with these offshore multinationals. It was a classic case, Mr Chair. This bill, this part of the bill, part 3 of this bill, provided the government with the perfect opportunity to actually level the playing field, and that's all, not tilt the playing field in terms of New Zealand suppliers, just level it, or New Zealand retailers, just level the playing field for New Zealand retailers. Instead, what it did, is what I believe it did, is it actually tilts the playing field towards the large multinationals as opposed to the good, hard-working middle New Zealand families who are owning the retail stores which are missing out on these things. Now, we hear time and time again about how people have bought a fantastic book on Amazon, or they've bought something from Abercrombie and Fitch, or any nature of good over the internet. It is becoming part and parcel of the way we shop. And one of the reasons why New Zealanders have embraced this form of retail therapy is because it is cheaper. It is cheaper. Now, what we are talking about here, Mr Chair, is not goods and services, not tangible goods and services that can't be bought in New Zealand. If that was the case, you can sort of understand that, you know, I can't buy this down here. The only place I can buy it is overseas, therefore I've got to. Well, that sort of makes sense. But when the same goods and services that you can buy downtown, you can also buy on the internet for a 15% discount first and foremost because there is no GST, then that is plain wrong. The IRD admits, Mr Chair, the IRD admits, as does everyone, and I suppose this is a common theme throughout the speeches today, that a tax system has got to be fair, it's got to be efficient, and it's got to be simple. This part of the bill, Mr Chair, misses a great opportunity to address a real problem we have got in retail New Zealand, and that is GST should be charged on online tangibles.
Grant.